All right, good afternoon. Today is December 13th, 2017. It's about 1:30 Pacific. And this is another update on the euro. Prices did what I expected it to do, and I profited from that. Um, Looking at the 15-minute chart here, I entered at 1729, which is down here. Actually entered at 1729 when prices, I believe, was about right here in this area, and my stop was at 1700. So I was playing this particular support level of 1725, and my stop was at the previous. I was just below 1700, which wasn't a support level, but I was expecting maybe a kind of a deep retracement, and then it will continue like maybe 1710 or somewhere around there. As you can see, prices went down to 1718. I got in at 1729. It came back to 1729, which was a small pullback, and then you can clearly count that this is the impulsive wave 3 that went above this resistance at 1785. And also went above the next level of resistance at 1810. So now the next phase will basically be to go above the 1855 resistance level, and it definitely appears that price is headed north. And if you look at it on a little bit of a larger time frame, the 4-hour chart, the 244 hour chart, on an Elliott standpoint, I have this as the one. This is possibly an A, and then this will be the B, and this is the C of 2. I do not like this. This is just no way on the Elliott standpoint that this is 2, and then now this is 1, and this is 2. This will be, and then it also can't be, this can't be 1, 2, 3, then 4, then 5 of wave 3, because then wave 4 will be it's penetrated wave 1. So this is probably the 1, this is the A, this is the B. So just to give you a better look at this, let's put the B here. Let's put the A here, and the C of 2. We're going to put that just down there, and I'm going to actually cancel that there. But this is basically a small truncated C, which is okay. So you have the A here, 3-way move down. You have a 3-way move up for an expanded fat B. Then you have the 1, 2, 3, 4, and then 5 for C of 2. And as clearly you see, prices broke what I had as a small trend, downtrend channel line. And once it penetrated that, I knew prices would continue up based off my support and resistance levels as well. And as you can see right now, price is finding a little bit of a resistance at the Ichimoku cloud lines at 1830. But I do expect maybe tomorrow, if not by Friday, prices would hover above the 1835 level, and then it would get a little bit of resistance in the 1850 level. It may come down, consolidate a bit, bound down to the 1860, but it's 16, but it should not go below 1810 again, and that's when prices will continue up. And this is all based on the report, so they say, of the Fed hike. But as you can see, if you go back in my videos as a start of Sunday, I posted what are my expectations just on Elliott counts and support resistance levels 3 days before this Fed hike, before we even knew it was going to be a Fed hike. But just based on the Elliott, I already anticipated a Fed hike, because if this was wave 2, I expected an impulsive wave move up. So, and it happened. So that's good. It's profit. If anyone took the trade at some point, great. This is not this is just more of a, it's just for my own personal use. But if you took it, perfect. If not, try the next one. No big deal. Looking again now at my 360 pound. I went in here when I saw somewhat of a double a double bottom here, almost a double bottom here at 130, 33.06. I put my trend channel to match this particular area, and if I knew if price would continue to find resistance at my trend line, then it would continue down. But as you can see, it went up, and the result is 94 pips. Now in this particular market, I don't like these swings that normally happens, so I raised my stop. So now I went from 33.21 to 33.78. So I've locked in, a little over 40 pips, and it should continue. Once price goes above 34.27, then I raise my stop again, and now I expect, if anything, if price does consolidate and come down on a pullback, then it will find support at the 33.86 level, 33.80, somewhere around there. So that's two markets, that's 200 pips, just about. That's not bad. Now I look at my Euro Aussie that I was in from the start of Sunday. And you can always go back to when I started getting into these markets Sunday and Monday. I was really only up 5 or 10 pips. Now over the course of not even 3 days, this is just Wednesday, you see 175 pips here. I was actually up about 212, and price continued to it kind of consolidated a little bit, but now it's continuing to go down. That's why I haven't moved my stop from here. So now you got 3 markets and you got almost 400 pips, and this is just Wednesday. I don't really like to go too small on time frames on most cross pairs. So when I took this trade, I took this trade on a double top here at 156.94, and I just saw it. I didn't even look at a daily, a weekly, or anything. I just looked at the weekly. I didn't look at a daily or anything. I just kind of went from there and just pure Elliott. Like I knew that wave 1 should be ending, and also I expected the euro to get some volatility from the Fed hike, which means that the euro would actually go down with the Euro Aussie, so a sell basically. So from that, I went in half a contract, and there you have it, 100 plus pips later. Now the last market that I've been in this week was the CAD. And I am a bit down on the CAD. I was up about 170. I am down to 128. It's a relatively smaller contract, but it's still 100 plus pips. That's 4 markets there, over 500 pips. And that's just in 3 days. It's the power of Elliott, but it's also the power of just sticking to just a few markets and really trying to understand the movements, the waves, the way the price movements in those markets. You don't have to trade 32 markets just because it's 32 pairs or 38 pairs. Take 2 pairs, take 1 pair, and just study it for months. That's how you really become comfortable trading. This is why I continue to post the Elliott 3 to 4 days. I'm sorry, not Elliott, the Euro dollar 3 to 4 days a week. Why? Because I'm trying to master the euro. It's one of the most volatile traded currencies, and to me, it's now that I've been trading for a few years now, it's not easy, but I know what to expect with that. With the cross pairs, it's really difficult to know what to expect. On a long term, it's a little bit of a different story. But you have swings, and you have to be careful with those swings because it can swing in the opposite direction. You can be up 200 or 300 pips. Next thing you know, you're down minus 200 pips as well. You don't really see that much in the euro. The pound, you can, especially last year with Brexit. But you don't want to just only trade dollar pairs either, because you're kind of putting yourself putting all your marbles in the same bag, so you kind of want to get away from that. But if I had to pick just one particular pair that was dollar, then obviously it would be the euro. And then if I had to go with a cross pair, it'd probably be the pound New Zealand. It could be the Euro Aussie. I've been pretty great with the Euro Aussie. And then if I throw another dollar pair in there, it'll probably be the Aussie dollar, maybe the CAD here and there. I kind of stay away from the yen. It kind of has its own little thing going on. The New Zealand is a hit or miss, but it's still pretty good. The pairs, most dollar pairs, all of the pairs are predictable in a sense to where if you have the correct counts and you follow it and you demo it or you trade small, eventually the patterns will come to light. But as an amateur, what I'm less than 3 years pro, so I'm still an amateur. the last thing I want to do is continue to try to trade all these markets just so I can show that I'm this fabulous trader. It's not about that. So you just take a market or two and you just become great with it. And that's what I'm basically trying to do here, especially with the euro. That's what I like, and that's pretty much what I've been discussing for the most part on a every other day basis. So going forward, and I'm going to leave it on that. Here's my expectations. Price is most likely going to go to the 1855 level. And at that point, it will find a bit of a resistance. From there, it will start bouncing between the 1855 and the 1810 level. It should not go below 1810. Because not right now, if you look at it on Elliott perspective on a smaller time frame, if this is wave 2 and this is actually wave 2, we're in wave 1 of 3 now. So I'm expecting prices to go above 1963 and then above 120. So this will basically be, you can almost say that there's two ways to look at it. So you can do that. This is say this is 1, 2, 3 here, 4, and then 5 of 1. And now you have the A here, then you have the B here, and then you have a ending diagonal C here for 2. If you did that, let me look at the Fibonacci retracement from that. And if it's at 0.618 or 0.5, then you can actually say that that's a different alternate count. So if you put the 1 here, so yeah, and as you can see, just look how nice that looks. I just thought about this right now, just looking at the pattern. The pattern just popped out at me, and I was like, okay, hold on, here's another way to count it. So on a larger time frame, I'm gonna get rid of all of this. I'm gonna make this a little solid. I'm gonna bring it over to the right, and then look, boom. It was just shy of 0.618. So price ended at 117.18. 0.618 was 117.09. So this can be the 2 here. Instead of this is an A, B, C of 2, this can be the 1. So my B can be a 1. Here's the A, then here's the B, and then here's the C of 2. At the end of the day, price is still headed north. So whether I have this as a 1 here, then an A, B, C, or 2, or my 1 here. Either way, price is headed north. So the one thing you have to keep in mind, if the 1's here and this is a 2, well, price is going to go much higher than what I expect it to go versus this being a 1 and then this being a 2. So for example, let's say that I'm going to do an extension. So if this is the 1 here and this is the 2 here, well, I'm expecting wave 3 to go at least 1.618 of that. 1.618 is going to be 161.8. That's 123.77. That's just for wave 3. Now, let's get rid of this. That was 123.37. I get rid of that. I start over. We do the fib extensions. Again, you got here to 1. This is wave 1. And over here is still wave 2. And let's do 1.618 of that. That's 122.19. So that's a little over 100 pip difference between what wave 3 is going to be as long as price continues to move up. So the key here is once it goes above 121, basically, then that's when I would start to raise my stop, basically. I don't plan on, as long as price continue up, continues up, all I'm going to do is add contracts. I'm not going to exit this trade at all, because if this is the correct count, well, I'm expecting a move to go to a bare minimum just for wave 3 between 122 and 123. That's just wave 3. Then it will consolidate and come down for wave 4. And then you have wave 5 that will go to 124, 5 or 6, somewhere around there. I haven't done the particular count on a larger time frame yet. At the end of the day, as I'm closing out this particular trade, I'm up 100. Closing out this video, I'm up 101 pips just on the euro. I'm up 95 pips just on the pound. I'm up 172 pips just on the euro Aussie. I am up where's the other one I was in? I don't even remember which one I was in. The CAD, I think I was in. 125 on the CAD. That's 4 markets over 500 pips in 2 days of trading time. Technically 3 if you count Sunday afternoon. Price will continue to go, and it will find some support, resistance near this 1855 level. So right now, I do nothing. My stop is raised from 1729 to 1781, and I'll raise it just a bit shyer to roughly about 1785, because I expect price to continue to bounce between 1810 and 1855. Until then, I'll have another video. I hope this helped. Happy trading.